One of our viewers asked this question: is lump sum investing better than dollar cost averaging? We're going to explore this subject and more, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. We have a real interesting topic here today. We're going to look at some research on lump sum investing and also dollar cost averaging. Which one is better? Keep in mind, there's pros and cons to both concepts. Now, I know many of you already understand dollar cost averaging and lump sum investing. However, for our new investors, let's just review. Dollar cost averaging is investing a small amount of money on a specific period timetable. You could do it once a month or maybe twice a month, or you may be doing dollar cost averaging in your 401k. Lump sum investing would be taking one lump sum of money and investing it at a single time. We're going to review the analysis from this article here. Is dollar cost averaging better than lump sum investing? Before we start, let me ask you a question. Do you think this is a good time to lump sum invest right now? We're looking at the S&P 500, and at the time of this video, here's where the market is. Do you think this is a good time to lump sum invest? Let me know what you think. We're going to take a look at some data and research from Northwest Mutual. Now, keep in mind, this data doesn't take into account emotions and risk tolerance. In this research, what they did is they took $1 million invested immediately in the U.S. markets, and they looked at 10-year periods back to 1950. And they compared lump sum investing to dollar cost averaging. They used 100% equity portfolios, a 60-40 split between equities, and 100% fixed income. Again, as we look at this research, there's pros and cons to both methods. Here's our first graphic to look at. In the dark blue is lump sum investing, and the light blue is dollar cost averaging. This particular sample is using 100% U.S. equities back to 1950 10-year increments. And you can see that lump sum investing outperformed dollar cost averaging 75% of the time. Now we're looking at the 60-40 portfolio. Lump sum investing outperformed dollar cost averaging 80% of the time. Now here's the research using 100% fixed income, and the fixed income lump sum investing outperformed the dollar cost averaging almost 90% of the time. Here's the average outperformance of lump sum investing for the 100% equity portfolio. It was 15.23%. The 60-40 allocation was 10.68%, and the 100 fixed income outperformed dollar cost averaging by 4.3%. And this was in 10-year increment periods. And the main reason that they said that lump sum investing outperformed dollar cost averaging was because holding cash doesn't pay off. Now those were some pretty impressive results in favor of lump sum investing, and you might be thinking, I'll never do dollar cost averaging again. Now, is dollar cost averaging an inferior strategy? We didn't take into account here of stress levels and risk tolerance and also emotions. So before you lump sum invest, you have to consider those. Now, if you invested a large sum of money and it immediately went down 10 or 20%, that wouldn't make you feel very happy. So dollar cost averaging allows you to get into the market with a little bit more comfort and less stress. If you did a lump sum investment right before the .com stock market crash, it would have taken you about 7 years to break even again. Or if you lump sum invested right before the financial stock market crash, you wouldn't have been too happy. Here's some other advantages of dollar cost averaging. It's a great strategy for investing small amounts of money, especially like a 401k. You can do it weekly, monthly. Also, dollar cost averaging small amounts tends to be a better strategy than saving your money up in a savings account and then investing when you've saved up enough money. And then timing markets can also be very challenging. Now here's an advantage to lump sum investing. If you invest a large amount of money and you can handle with a possible 10 or 20% sell-off in your funds, then lump sum investing appears to outperform its dollar cost averaging. Now here's a disadvantage to lump sum investing. If you're nervous about the markets, then you're better off to do dollar cost averaging, get in a little bit at a time rather than just totally avoid the stock market altogether. According to the research that we looked at here today, lump sum investing can definitely outperform dollar cost averaging over time. But we have to take a look at our emotions and also our risk tolerance before we do lump sum investing. So I want to thank you for watching. If you have any questions, leave a comment. Stay tuned for our next update.